Hi, everyone. We're going to give it a couple more seconds to let people filter in, then we can get started. Okay, hi, everyone. My name is Marissa Carpio, and I'm the Policy Director for the Quality State Policy Center. ESPC is a nonpartisan, nonprofit organization advocating for fair elections and transparent government for all of Wyoming's communities. Welcome to Tax Facts, Lunch and Learn hosted by Wyoming Tax Facts and the Quality State Policy Center. I'll pass it on to Sue Summers to talk about our panelist and the topic today.
Thank you, Marissa, and thanks to the Equality State Policy Center. I'm Sue Summers. I'm a co-founder of Wyoming Tax Facts. Wyomingites committed to a stable economic future for our state by increasing tax literacy in our communities and promoting tax reform. Today's topic is Wyoming Taxes and You, presented by Brenda Henson, Director of the Wyoming Department of Revenue. Our presentation today has a heavy emphasis on property tax in Wyoming as it continues to loom large in the news, in the minds of legislators, and for many taxpayers. Now, Brenda's presentation will be shared with you all after today's webinar, and there's a lot in there. I know you're going to want to go through that on your own. Brenda Henson's bio on the website is very impressive. I'll just summarize it here by saying that she's had a long history of serving taxpayers in Wyoming, starting at the Laramie County level in 1988, rising to the state level in 2013, and being appointed director of the Wyoming Department of Revenue by Governor Mark Gordon in 2021. Brenda's family is blessed with 5 generations living in Laramie County. Brenda, thanks for joining us today.
Well, thank you. And I really appreciate this opportunity. Taxes are not exactly a pleasant subject, but it affects everything we do. Again, thank you, Sue, for reaching out. Thank you, Marissa and the Equality State Policy Center. We're going to go through a lot of information and hopefully take some of the mystery out of taxation. So the first thing I want to remind everyone is taxes are the structure by which we as citizens pool our resources to pay for infrastructure and services that we couldn't afford on our own. Think of those that came before us, before the roads were paved. You know, those were people that said, you know, we'd really like to have our street paved from this point to this point. How do we pool our resources? That's where taxes start and end. Trying to determine what services we as citizens wish government to provide, and then just how are we going to pay for those? We're going to focus on mainly property tax today, but we're going to talk a little bit about sales and use tax because that's important as well. For those of us responsible for administering those taxes, the key is that we're making sure that everyone's paying their fair share of that overall property tax burden, no more, no less. And it's the legislature and the governor that are making that determination based on input from citizens on what services we want and also how we want to pay for those services. So let's get going. Let's talk about excise tax first. Excise tax division of the Department of Revenue, we do sales and use tax, cigarette tax, tobacco tax, lodging tax. There's a lot of taxes that are really transactional in nature. So what is sales tax? It's typically a percent on a transaction. There are 45 states that levy a sales tax. There are exemptions out there. For example, if you are someone who does crafts or hobbies and you sell those, there's an exemption where you don't have to pay taxes on your materials, but you charge the tax when you sell the end product. There's all sorts of different exemptions. I think most Wyomingites are most familiar in Wyoming with we don't pay tax on food. And that was a big change several years ago. Wyoming sales tax dates back to 1935. And you'll find when you look at the literature, the reason that they implemented a sales tax was to reduce property taxation. They were trying to determine another revenue source. So the other piece that I wanted to talk about was a use tax. So remember that it's the transaction that we're actually charging a tax on. So whether you buy that product within the boundaries of Wyoming, or if you buy that product outside of the boundaries of Wyoming, that's when it's called a use tax. It's still a transactional tax. The tax is still due. Sales tax, you were physically in Wyoming when you actually had that transaction occur. Use tax is when that transaction occurred somewhere else and you brought that product back to Wyoming. We track both, and in this slide, we look at the historical sales and use taxes. As you can see, from 2016 through 2020, and that's fiscal year 2023, which runs July 1, 2022 to June 30th of 2023, we're up over $1 billion, excuse me. And you'll see that that increased significantly through the years. One of the reasons for that is marketplace facilitator. We had court decisions in 2018 that completely changed our sales tax structure in the United States. Basically, it said that they could be thresholds, that as long as certain thresholds are met, even if you had that transaction in another, bought it from another state, Wyoming could still charge that tax. And that was the change that basically is why sales tax is charged on online sales. For those sales that what we consider marketplace facilitator, where an online presence is representing the person that's selling the goods and also providing a mechanism for the customer to buy those goods. The online marketplace doesn't necessarily have the product themselves. They're just bringing the buyers and the sellers together. And that created this situation where we could go ahead and charge those sales taxes. And so the information that I've provided just kind of gives an idea of, we know, particularly during the pandemic, where online sales became sometimes our only mechanism for purchasing goods and having them delivered. And it was really important before the pandemic that all of that case law had already taken place. So with that, definitely willing to go back and answer some questions related to sales and use tax, but let's jump right in to property tax. And let's think about who pays property tax. Well, bottom line, if you own property, you're paying property tax unless there's an exemption. So you've got homeowners, business owners, manufacturers, farmers, ranchers, public utility companies, mineral producing companies, landowners, equipment owners. So it's important to note that as we spread this overall property tax burden, the more diverse the tax base is, it makes it so that each individual person is paying less. If the burden stays the same and you spread out the tax base, then that makes it less of a burden for individuals. My example of that is, let's just say all we did was tax homeowners, and all of that burden was on homeowners, and all of the rest of those other types of property were exempt. We've still got the same services that we need to provide, but you would see the property taxes for homeowners be significantly higher if that entire burden were on them. So as you can see, a lot of people pay taxes. Let's talk about equipment real quickly. So in Wyoming, there's an exemption for personal property, which personal property is you've got real property, which is land and structures, and then you've got personal property, which is more geared towards the equipment. And so real property, that's somewhat, these pictures represent structures, land, things that are affixed to the land. What you would think of as if I were to take a deed to the courthouse and buy a property, everything that would go with that deed. Now let's talk about personal property. Personal property is where we have furniture, fixtures, equipment, road graders, manufacturers, all of the equipment that are used for that. All of that is included in our tax base currently. Now, there is an exemption for personal property held and used for personal use. That's the homeowners of Wyoming who don't have to pay taxes on their personal property. I will tell you, in the 80s, we used to. The tax assessor in each county would be required to, find out how many TVs or refrigerators were on a property. But the legislature in the 80s said, no, we're going to exempt those from property taxation. But in turn, all of the equipment that is used for a business purpose, income producing type properties, that's all taxable. And so that's important to note. So sometimes we hear people say, I paid sales tax on that piece of equipment when I purchased it. Now you're asking me to pay a property tax. They are two separate taxes. Again, the sales and use tax is transactional. It's a one-time when you purchase that equipment. Now, property tax, this is when you pay on that property every year that you own that property and use it for a commercial purpose. And so it's their distribution of those taxes are different. Let's back up and talk about that sales and use tax. So sales and use tax is distributed to state government, local government. You've got optional taxes that voters vote on at different locations. But property tax, that's more of your local government functions that utilize that money. So as we go through the slides today, just stop and think about that. Yes, you pay tax. One's on a transaction, one's on the actual property, and the recipients of those dollars are different. So let's talk about who pays property tax in Wyoming. So I'm looking at the 2023 assessment and tax year. So what these values represent are all of the assessed values that were accounted for the 2023 tax year. Those bills went out. You would have received those in late September, and then you pay those. You can pay them in two payments, part of it in November of 2023, the second half in May of 2024, but that's a fiscal year 2024. But we talk about it as 2023 tax year. So when we look at overall assessed values in Wyoming, residential is in that first spot with 28.895% of all when we compare residential assessed value to overall assessed value for the state. So that's the number one taxpayer, 9.8 billion in assessed dollars. Now, as we go down through that list, and they are listed in order of percentage, oil production, second, 22%. Natural gas production, third, 18+%. Coal production, fourth, 7.8%. The light blue, if you add all of the mineral production, and that is just the production on minerals is taxed one time. It's only taxed when it's severed from the ground and it is reported. But you'll see that over half of our property taxes in 2023 were related to that mineral production. Now, one thing that's important to note is when we talk about that total assessed value of minerals, that $17 billion plus, that 78% of that 17 billion, that value is in 4 counties: Campbell, Converse, Sublette, Sweetwater. So just because as a state we see these values, that does not necessarily mean that all your taxing entities have the benefit of having that value. This slide is just related to statewide value. Now, we do have some taxing entities that have the authority to tax on every assessed dollar statewide. The 12 mills for the school foundation is one of those, and we'll talk about that a little bit more. But another part of this is when we look at these statewide numbers, that is not a true representation for various taxing entities. For example, The assessed value in Albany County is 74.6% residential. That does not mirror what you see as a state as a whole. Interestingly enough, in Teton County, 86.68% of their value is residential. While in Commerce County, that percentage is 3.27%. Significant different tax basis. Talk about demographics. So interestingly enough, in the counties, when we look counties, countywide, the 12 mills that the counties, and we'll talk about mills a little bit later, for the counties, you're only looking at a small portion of it being residential in general. But if you look at your cities and towns statewide, over 71% of the assessed value that is within the boundaries of cities and towns is residential. So a whole different picture that we're looking at. The next couple of slides are going to just talk about statewide and some of that historical percentage of total assessed value per type. So as we look at 2010, 1.03% of our value was related to that ag land, being dry crop range or irrigated land. And then we see 20% for residential, 5% for commercial, 9% for industrial. But down at the bottom, you'll see 59% of our value was related to minerals. If you follow this through and you go towards, the highest amount for residential at any point was 34%, and that was in 2021. Well, one of the reasons for that is mineral production that occurred in 2020 was low. And as soon as mineral production goes down, then you see that percentage that residential brings to the overall tax burden go up. So here's the historical assessed values. You always hear that Wyoming's on this roller coaster. And when we look at our assessed values, we see increases. From 2000 to 2001, we saw a 33.5% increase in assessed value. Then we saw another 5.95. As you go down through that list, jump down to the time period of 2016, where we saw almost a 20% decrease in 1 year in assessed value. Now in 2021, we saw a decrease of 12.66%. Then we saw it jump back up for 2022, an increase of 35.15%. But if you look at the assessed values, the assessed value in 2022 is 26 billion. Go back to 2015, same assessed value going back to 2015. So really, when you look at the state's assessed value, the rest of the story is that percentage that minerals is contributing, that production that is when that property value is severed. And so other than that, if we were to look at agricultural land, residential, commercial, industrial, those really have stayed fairly flat through time with typically a slight increase from year to year. But our tax base in Wyoming with our current tax structure is truly geared towards the mineral industry is paying a significant portion. Now, I would be remiss if I didn't also point out that the mineral industry not only pays taxes for property tax on the mineral that is produced, but they also pay property taxes on all of their equipment, any real property that they may own. And we aren't going to cover this much today, but they also pay severance tax. Now, for the state general fund, the three major contributors to that general fund are severance tax, sales tax, and then also investment income. Where on property tax, which is what we're talking about today, that really, those tax dollars go to local government. So I'm a homeowner. Let's talk about what that means. So the county assessor in each of the 23 counties is charged with identifying ownership of property. They're charged with gathering property characteristics on those. It's important to note that when you get an assessment schedule for real property, land or structures, the value is absolutely tied to what exists on that property, whether it be square footage of that property, the year that it was built, the deferred maintenance of those structures, how many acres of land do you have, where's it located? Location's very important as we determine fair market value. But county assessors utilize a computer-assisted mass appraisal system to store and analyze a lot. I can't even explain how much information that they are collecting on a daily basis. First of all, doing their research in the county clerk's office related to who owns that property, and all property has to be taxed as it exists to the owner of record as of January 1 of each year. So assessment schedules that went out in that March-April timeframe of 2023 reflected that ownership. Any change in how that property tax is paid, let's just say you sold the property 4 months in, that's a contractual agreement between the buyers and the sellers, but legally everything has to be assessed as it exists January 1, and it's important that the assessors do that research. So we talk about the value is based on those individual property characteristics. So we start with a current replacement cost, and that, even if your characteristics don't change, replacement costs change because of labor and material costs. So that's a component in the CAMA system. We then have to depreciate that. If I'm a buyer and I'm looking at 2 properties and one house has been maintained, it's been painted, it's there's not a lot of deferred maintenance there. And then you've got the house that's exact same square footage, exact same number of bedrooms, bathrooms, but there's a lot of deferred maintenance that I'm going to have to paint, invest in money, labor. That fair market value is not the same as the one that's been maintained. Those are all things that go into how the assessor values that property. And then they have to look at sales information and uniformly adjust those for those sales. So as a property owner, you want to make sure, we talked about all the information in the CAMA system. So back in the 80s, the legislature felt that it was so important that Wyoming taxes have the same structure and be valued using the same methodology. They have paid, the legislature has funded a uniform computer system mass appraisal system that's used in all 23 county assessors, and that's been in place since the late 80s. And that's where county assessors key in personal property declarations that property owners, businesses report on an annual basis. Those costing tables I mentioned are out there. There's uniform reports. Regardless of where you own property in Wyoming, you can go to the county assessor's office and get a property profile that shows you exactly how your value is calculated. That communication between the property owner and the assessor's office is really key to an accurate assessment. And I do encourage every property owner to reach out to their local county assessor, make sure that square footage is accurate, make sure that the information is current. And fortunately, most of our county assessors have that information available online. And so you can simply go out, you've got pictures, you've got square footage. Many of the assessors even put the sketch so you can see that information. But if there's something on the interior specifically that you feel that is affecting the fair market value of that property, go in and have that conversation. You've got 30 days when you get your assessment schedule to reach out to the county assessor. We're going to talk about that. So the assessor has to send those out no later than the 4th Monday in April. And then you as a taxpayer have 30 days to say, I'm just not sure the property's worth that. And whatever your information is, whatever your gut tells you that you just don't think your property's worth that, take that in and discuss that with the assessor. And then you have an opportunity. If you and the assessor still can't come to an agreement, you can file an appeal with the County Board of Equalization to actually present your information. Now, you can't appeal your tax amount, but you can appeal the estimated fair value. And let's just look at one of those. Now, this is the portion of the assessment schedule. You'll see fair value on the top of this slide that by the level of times the level of assessment is an assessed value, and then last year's mill levy and last year's tax. Our laws require the county assessor on the assessment schedule to show you last year's tax and then what your new value is, and that's that middle area, the red arrow pointing up. Take a look at that land value and the improvement value. See if you think it's within reason. If you were to sell that property on January 1 of 2023, in this instance, 2024 for next year, the total of those two is down there on total valuation used to calculate tax. And then it actually gives you an estimated tax based on the prior year mill levy. So in this particular instance, even though the fair market value went from $229,000 the prior year to $239,000 the following year, the estimated tax amount was the difference between $1,654 and $1,659. We won't know the actual tax amount until mill levies are set, and those are not set until August. And we'll cover that a little bit more as we proceed. So the tax calculation is fair market value times the level of assessment gives our assessed value, and then the assessed value times the mill levy. The mill levy is going to be different depending on where your property is located. So this map shows you the various tax districts in Wyoming. And what that means is for every one of those colors, the same taxing entities have the authority to levy a tax on property within those boundaries. So 612 different tax authorities. And let's talk about what those are. So cities and towns, we've got 99 of those. We've got community colleges. We've got 8 community colleges now, conservation districts, improvement and service districts, just to let you know, that's where kind of the example that I talked about before, where a group of property owners in a subdivision, they want asphalt roads instead of dirt roads. And so what they do is they create an improvement and service district and they tax themselves. They borrow money and they tax themselves to improve those roads. All of the entities other than cities and towns, and also the school foundation, which is one of the taxing entities, everybody else, the museum district, cemetery, senior citizen service, those were all formed by a vote of the people. That's where these people came together that owned these properties, and they formed these districts and decided to tax themselves. So interestingly enough, one of those processes, if any of our listeners are from Laramie County, you have heard on the news that Laramie County Fire Authority is asking property owners right now to borrow money for $5.9 million for equipment and fire station improvements. You may have also heard the Cheyenne Downtown Development Authority. They recently had an election and they voted to continue taxing themselves 20 mills. So this is our right as property owners to pool our resources to pay for these types of things. Now we know what the taxing entities are. Now let's look at those services that government provides. That's on that left-hand side. And I apologize, it's such small print, but we're talking about, this is our methodology, a mechanism for pooling our resources to pay for education for K through 12, higher education through community colleges. There are zero property tax dollars that go to the University of Wyoming, just to clarify that. But we pay for our law enforcement, fire protection, emergency preparedness, libraries, hospitals, golf courses, construction and maintenance of our roads, economic development, weed control, museums, water and sewer, governmental administrative offices. When you go into the city hall and get a license, a parking license, or any of those types, development, you're trying to develop a new subdivision, those planning agencies, those are all paid for by property tax dollars. So I feel that, that's important to note that, what are we getting for those monies? So for example, a mill, what is that? It's literally $1 per $1,000 of assessed value. So as a county government, they can levy up to 12 mills, but no more. As a city entity, you can levy up to 8 mills, no more. So each entity that we just talked about, they all go through a budget process every year, and they take their budget amount divided by the assessed value of the property within their district, and that calculates out to a mill levy. So for example, if you have a $1 million budget for a bond that has to be repaid and you've got an assessed value of 480 million, that calculates to a mill levy of 2.083 mills. And if the statute said that you could only levy 2 mills, that's all they would be able to levy. And there's a lot of details and statutes related to each of those taxing entities. But when we look at the overall taxes, where do they go as a state? Almost 17.5% go to fund county government, 1.84% for municipalities. For special districts, those are your fire protection, improvement and service district, weed and pest conservation district, all of those, about 7.84% of our tax dollars statewide go there. But grand total, all education, that's including our community colleges, 72.837%. You'll also note that the state general fund, again, as I mentioned before, 0 property tax dollars go to the state general fund. Interestingly enough, the last time the state of Wyoming actually levied a property tax to go to the state general fund was in 1969. And it was 1.5 mills. It generated $1.8 million. But just an important note to know what happened in 1969. That's when we implemented severance tax in Wyoming, and the state general fund no longer needed to use property tax dollars. So with that, real quickly, every single property owner gets the assessment schedule in that April time period, and then you'll get a tax bill. Once the mill levies have been set in August, then your county treasurer will send out a tax bill. Every tax bill is going to provide you with a breakout. Yes, it's going to tell you the total tax amount that you paid, but on this particular slide, you can see this is a fair market value property of $350,000. It's assessed at 9.5%, which means basically the state of Wyoming is exempted all but 9.5% of the value of your property. We're only going to tax on 9.5% of that. You take that 33,250 and you multiply it by, let's look at the K through 12, the district levy. Every school district levies 25 mills. On this bill, that would be $831.25. There's a mandatory 6 county mills that goes towards education. On this bill, $199.50. I mentioned the school foundation fund, that's 12 mills. Every property owner in the state pays on that. And then in this particular school district, they also levy a rec mill, 1 mill. Then the additional levies, so that county levy, that up to 12 mills. Weed and pest, we've got Northern Wyoming Community College on this bill. It happens to be a Sheridan County bill. And then the Conservation District. Conservation District is established in this particular community, but they're not levying a mill levy. They went to the voters, perhaps, and didn't get a mill levy passed. We have a voice in those mills. And then the municipality. So even though as a taxpayer, I'm paying $2,377.38, I now know, based on my tax bill, that the majority of that is going to education. And the county, even though it's the county treasurer that sent the bill, the county on this bill only got $399 to provide all the services that they do for a taxpayer. So let's just look at, here's a Sublette County bill. Again, same premise as far as those individual calculations. And the county in this instance has actually broken out the county general fund, the county library, county fair. You can actually see to the county museum, my tax in this particular example was $4.06 to the museum, but you can break it down, excuse me, to see exactly where, in this instance, the $1,952.95, what entities the county treasurer collects that, and then they distribute that immediately to those county, to those entities that have the ability to levy a tax. So that mill levy is going to be different depending on where your property is located. So let's just look at some examples of that residential property. So in the city of Gillette, 2346. In the city of Cheyenne, the same $350,000 residential property, $2,399. In the city of Douglas, $2,234. Again, it's all based on what are the entities that have the ability to collect a tax. And then I've also included some of the other states that surround us on what that $350,000 property tax would be. So let's talk about property tax relief. That's been in the news quite a bit. You've got a veterans exemption in Wyoming that is administered through the county assessor's office. Veterans do need to apply to the local county assessor no later than the fourth Monday in May if they wish to use it on their current year property tax. And that veterans exemption is subtracted off of that bill when the tax bill goes out. But the state, through the legislature, actually backfills. So all of your taxing entities do get every dollar that they're entitled to on the veterans exemption. It's just that the state of Wyoming pays that on behalf of that veteran. The statewide property tax refund program, that program has expanded this last year, and I'll talk a little bit about that, but I won't go into detail. The county option property tax deferral, that's only available in Teton County. And then there's a county option property tax refund program whereby county commissioners can set aside their own money out of their own revenue sources and provide refunds to their property owners. Now for 2022, the only counties that approved that were Albany, Converse, Lincoln, Sublette, and Teton. But let's talk about that statewide program. So the statewide program in the slide you see here kind of gives you a historical background of tax year 2019, tax year 2021, and then the refunds that were available for tax year 2022. You'll see from 21 to 22, we went from 4,395 applications to 9,717 applications. We went from approving 3,000 plus refunds to 8,800 plus refunds. The reason for that is during the 2023 session, legislature increased from, instead of the maximum income criteria being 75% of median household income for each county, they increased that to 125%, really opening up the door for more people to qualify. The other thing that happened was you could get 75% of your property tax bill refunded if you met the income and asset criteria, as opposed to the 50% that it was historically. So bottom line, we saw the average dollar refund of those go up $300 from what it was in prior years. And I do encourage the listeners to follow because there are several property tax related bills that will be considered in the 2024 tax session. 2024 legislative session, excuse me, to include taking another look at the statewide property tax refund program. So this program cost from the state general fund $8,263,783. Now keep in mind, that's money that the legislature took out of the state general fund. Now, property taxes don't go to the state general fund. So that truly is just legislature wanting to ensure that those that are in need, the most need, because it's not across the board, have an opportunity for some property tax relief. But with that, I think I'm a little bit over on time. We've covered a ton of information. I'm really looking forward to an opportunity to go back on some of these subjects and answer any questions that the listeners may have.
Thank you, Brenda. We do have one question in the chat currently. The question is this: there's a ballot initiative that is going around that aims to cut property tax by 50%. What would that look like? What would happen as a result?
That's a wonderful question, and thank you, Sue, for relaying that. So it means different things for different services. So for example, we talked about statewide and the percentage. So if we've got 28% of our assessed value statewide related to residential. Now that initiative would provide 50% exemption to if the property owner resides in that property and they've been in that property at least 6 months and they have to have been a Wyoming resident for a year. So it's not across the board, but we do know approximately 72% of our residential properties are owner occupied. So what it would mean statewide is that assessed value for residential, that I believe it was 28%, it's going to impact that statewide. But let's talk about those entities that really are more residential property. So those municipalities. So residential for some of those municipalities, we have some municipalities where the residential assessed value is upwards of 90% of their total assessed value that is a revenue source that they rely on to provide services. So it really comes down to those taxing entities and how are they going to provide the services that we as residents expect from them. But if we don't have the property tax as a resource, how else will they receive that revenue? So it really is depending on where your property is located and what taxing entity you're talking about. If I'm in Campbell County and Campbell, Converse, Sublette, Sweetwater, those 4 counties that have 78% of the total mineral value for the state, for the county government, they're still getting those mineral values. But if you go to the city of Gillette, they don't have the benefit of having mineral values included in their assessed value. They rely on residential property owners. And so there's going to have to be a discussion about what services are no longer funded should those taxes be cut. And then how that impacts education, that's an entirely different subject that I know that would take too much time today, but it definitely would impact how we fund education in the state.
One question I had too, I'll jump in here. Excuse me. Would you say that the current bump in property values, yes, in values rather than, it isn't the property taxes that are going up, it's the value of the property. Would you say that's a temporary problem, Brenda, or something long term?
Thank you for that question. I don't have a crystal ball, but I will tell you this. So one of the reasons for the increases in values for residential specifically the past couple of years related to supply and demand, obviously, but it related to construction costs. We saw significant increases in the price of lumber and the price of shingles, the price of labor. We have seen those for the last few years. And so now let's turn to, October of 2023. There's some definite things changing in that marketplace. First of all, we're seeing those building costs flatten out. If you go to the lumber store, those types of things, I'm not saying they're decreasing, but they're flattening out. So we're not seeing those big increases. The other thing that's going to impact our markets is interest rates. When we historically had interest rates that were in that, for 30-year mortgages and, 2-3%, that gave buyers a lot more buying power. Now that we're looking at 7.5% interest rates on a 30-year mortgage, that's going to impact what people are able to pay for properties. So I think it's going to be an interesting dynamic as county assessors are responsible for valuing property for January 1, 2024, because we saw those interest rates. When you look at interest rates in January of 2023 compared to interest rates in December of 2023, I think that impacted the marketplace, and that's something that has to be analyzed. So do I think based on the information that I have, that we'll see a leveling of some of those values. That may be. I will also state that we have some very scenic areas in Wyoming that sometimes the ability to get a mortgage is not a factor. It's making an interest rate on some of those type of properties not impacted as much. And we also know that there are properties within the state of Wyoming where they will buy an existing property, completely tear down existing structures and build to their liking. And those are the types of things where the normal supply and demand doesn't necessarily account for those types of influences in the marketplace.
It does get really complicated, especially with the interest rate changes too. That affects so many things. I want to catch up on a previous question. How do property taxes affect market/real value?
So property taxes in Wyoming, if we're just talking residential, we rank as far as, it's always an interesting scenario. If all you did was take the total property tax revenue and divide it by the number of people that are in Wyoming, it looks like our property taxes per capita are high. But that's not the whole story. The whole story is the majority of those property taxes are paid by the mineral industry in the form of a production tax. So if we look at residential properties and just do that comparison of, I own a $350,000 property, what are my property taxes? We know that people move to Wyoming, and the fact that we don't have high property taxes for residential and we have no income tax is one of those reasons that they move to town. Now, as far as the commercial outlook, we are the number one. I just got the most updated report. We are the most tax-friendly state to commercial business and property owners in the nation, for a lot of reasons. So that's important to know. But for me as a taxpayer, when I have an assessment schedule and a tax bill from 2022, and it shows that my property taxes were $2,200, and then I get my tax bill for 2023 and they went up $600 or more, that's a significant hit to me as a property owner. And so first of all, I want to make sure that it's right, that the appraisal is based on accurate information. But it's important to note that in Wyoming, we have some mandatory mills. Those being the 12 mills to the school foundation, the 25 mills to a school district wherever our property is located, the 6 county mills that goes to education. Those 43 mills are the majority of the mills, and they are levied at that amount on every property in the state of Wyoming. So anytime the fair market value goes up, you'll see your property tax bill go up. Now, on the other hand, if I live in a fire district and we've got a bond to pay, and the bond is $1 million this year, and the assessed value went up from the prior year, now my mill levy goes down. And then I'm still paying my fair share, but the mill levy has gone down because the assessed value has gone up. And that's the way most of our special districts, any bonds, fire districts, conservation districts, most of them work on that methodology. It's just the mandatory mills of the 12 mills for the school foundation, the 25 for education, K through 12, and the 6 mills. And so that's where we see an increase in our property taxes anytime our property value goes up. By the same token, if those property values go down, which for most of us, our property is our biggest investment we may make in an entire lifetime. So we don't necessarily want our property value to go down. However, if it stays flat, those entities, see the same amount of tax revenue. So I hope that answered your question.
If people feel like they need a follow-up question, please do put it in the chat. And I would note, you know, when we want to sell our property, we want really high valuation, and we want to buy a property, we want it really low, right?
That's a great point, Sue. But you know, the key is I've found in 3 decades of doing tax administration, both at the local and state level, the majority of taxpayers, they just want to make sure they're paying their fair share. They don't want to pay on if the value is determined by the assessor is too high, have that conversation. If it's too low, have that conversation. I've actually had people come in and say, you know, I just replaced my water heater and I've got my property on the market and I really want you to increase the market value. I believe that people are honest. They just want to pay their fair share. But I think where the question lies is, you know, sometimes, you know, yes, the majority of the voters paid to implement an improvement in service district, but maybe I voted no. You know, I'm still frustrated. The majority won. We are, you know, a democracy. The majority said, yes, we want to pave the roads, but I'm still someone that is really on a tight budget. And I didn't want my property taxes to go up to pay for that $5.9 million. But yet I'm still going to have to pay my fair share of that. But I think that's where the legislature starts looking at these other property tax relief options. And seeing, you know, where there's that need, and whether it be the refund program, the deferral program, you know, the veterans exemption program. There's others that are out there for consideration. There's the concept of providing seniors. There's a bill out there that the Revenue Committee is going to consider that would be if you're 65 years of age and you've owned and paid property tax in the state of Wyoming for 30 years, the legislature may grant an exemption for that. Those are all opportunities that the legislature has to grant those exemptions. It doesn't necessarily change the basis of our property taxation, but it identifies to whom the legislature wants to provide property tax relief to. And so I think there'll be some fascinating discussions related to that. Historically, just because I've been a party to some of the conversation, it should be known that it was discussed when the property tax refund program was put in place. Do we put an age criteria on this? And all of the testimony was that there are seniors in Wyoming that are wanting to, and they don't require tax relief. They believe that there's not a need, that there are others that might need that relief. So the property tax refund program is focused on income regardless of your age, and looking at that median residential property tax bill, 1/2 of that for the county where your property is located as being that maximum refund amount. But age didn't come into play at that point. Maybe we're at a different time. You know, our demographics of Wyoming continues to change. And we know that we have, born and raised in Laramie County, we have the Air Force Base here. We definitely see a large group of individuals who have been stationed at F.E. Warren come back here to retire. And they aren't necessarily looking for property tax relief. They just want to live in Wyoming.
Right, right. Now, I'm mindful that we're getting pretty close to our cutoff time. Hopefully this is a quick question. I think this goes to the difference between how minerals are assessed versus property tax. Does the boom and bust of minerals affect our property taxes or our assessed value?
So as it relates to when there's a boom, if we've got a housing shortage, those types of things. So it's actually the sale prices of those properties that are considered for property tax purposes. So we've got that. So minerals, the production, you know, they're taxed at 100% of fair market value. Industrial property in Wyoming at 11.5%, and then the all other category, which includes agricultural land, residential, commercial, That's all at that 9.5%. Now, granted, those percentages for those 3 tiers can change. The legislature can change those at any time, but they can't create new tiers, which leads us to another portion of what the legislature considered last year and adopted, was to put on the ballot the ability to make residential their own separate class and give the legislature the authority to put those at a different level of assessment. So that'll be another topic that I encourage your listeners to pay attention to. So again, whatever we do with our property tax structure, sales tax structure, severance tax structure, all of those, we just always have to keep in the back of our mind, what are those tax dollars used for? What services do they pay for? And if we don't want to pay them in property taxes, how do we want to pay for those? Or maybe there's just things that we no longer want the government to provide to us. It's really an interesting concept, because many times when we as citizens are struggling the most, whether it be because of inflation, increased cost for our electricity, our food bill, when those are going up the most, tend to be when we go to government and say, I need some help. And so it really is trying to create that balance. And I will say that legislators, they depend on the public reaching out to them, providing their input, testifying to the legislature. I will say that, the one thing the pandemic gave us is an opportunity for the public to definitely participate in their government, attend budget meetings of those taxing entities that are levying a property tax, attend legislative meetings, let your voice be known. And these programs, thank you so much again to the Equality State Policy Center and Sue for you reaching out, because I think all of this helps all of us as citizens to have a better idea of where our property tax dollars are going.
Well, and thank you for so graciously agreeing to appear today. Before I let you go, one last question. What is the most common misconception about property taxes or Wyoming tax revenue in general? What one thing, well, this is a big question. What one thing do you wish all citizens could take away from this conversation?
So I think the biggest misconception that I've heard through the years is, I own my property, but the government is taxing me for my property. That's not the case. The government is using taxation as a mechanism to pay for services. And so that would be the one thing. Sometimes we have property owners that, they believe that this is my property and I shouldn't have to pay property taxes on it. And I shouldn't, the county, if I don't pay my property taxes for 5 years and you go through that whole process of a tax sale and those liens being placed on a property, it's important to note the lien is the dollar amount that, pursuant to law, was being collected to pay for our services. It doesn't have anything to do with how we own that property.
Right. Well, thank you for that clarification. I feel like this entire hour has been trying to clarify and enlighten all of us. So that's very valuable, I hope, for everyone. And I hope everyone enjoys going through the presentation when they get it from ESPC later. Thank you again, Brenda. Thanks for everyone who's attended today. Marissa, would you like to take us out?
Absolutely. Thanks for joining us, everyone, on Tax Facts Lunch and Learn with the Wyoming Tax Facts and Equality State Policy Center. We would like to thank our sponsor, the Wyoming Community Foundation. Our next webinar will actually be in January after the holidays, so stay tuned for more information. Go to our website, equalitystate.org/tax to sign up for the next one or to get those notifications. The Equality State Policy Center is a 501c3 nonpartisan nonprofit organization focusing on fair elections and transparent government. Thank you so much, Brenda. Thank you, Sue. Thank you for everyone who came. We'll see you next time.